Hello everyone, welcome back. For this stream, we're going to focus on Bitcoin. I'm going to recap the longer term time frame counts that we've been monitoring. However, we're going to focus mainly on the lower term time frame during this stream as well. So let's go ahead and jump into it. The first counts we're going to go ahead and just review is our bearish count, the ABC, for a cycle wave 2. Essentially, we're looking at this as a large ABC, an A, B, C. Internally, we also completed another ABC as well, A, B, C. Internally, this has great geometry, and it also has great timing. They are both of about 5 to 4 months, and the correction was about 4 months as well. So a lot of confluence that this was a structure of its own structure. On top of this, we also met the objective on the monthly. We had this large monthly fair value gap. And we also had this buy-side liquidity here as well. So we swept that liquidity, engaged this fair value gap, and we pivoted away very strongly. A very strong pivot away. Now, the next target that we would be looking for on this longer term time frame would be this monthly fair value gap here, coupled with the minimum target for a C wave, a 1.13. The only thing we need to really monitor at this point is maintaining that this is a pivot. And we are pivoting away. And we'll continue to have bearish market structure. And this is not a pullback, where we just have a slight pullback where we take the highs. Because if we do, ultimately this count will be invalidated in my perspective. The other ways that we've been monitoring this is that the cycle wave 2 actually completed over here. And this was a triple zigzag, a W, X, Y, X, Z. Now it's about monitoring how we're seeing this structure unfold. Due to the timing of these structures, I think that they are part of the same structure, meaning this is a wave 1, a wave 2, wave 3, wave 4, and we have yet to come for wave 5. Because once again, these the timing of these impulses here are pretty much the same. So it leads me to believe that it's part of the same structure. With this shallow correction that we had here, due to the guideline of alternation, we're going to be looking for more of a sharp correction here, meaning we don't want to take this high. It can happen. We could be taking the high as a flat and come back down for a C still. Alternation is a guideline, it's not a rule. So that can happen. But probability-wise, we expect a sharp correction. Now, since the second impulse, this impulse, was shorter in time than our first impulse, it's possible that this could be a 1, 2, 1, 2. Still very possible. There's two ways I could see this as a 1, 2, 1, 2. It's a matter of perspective of where you have the impulse ending. I can see it like this, as we have on all of our counts, just like that. Or you could actually have the wave 1 pivot ending right here, right at this zone. And you could have this as an A, B, C, flat. Now, last time we looked at this, remember we said that it could be ending right here. It could have already ended as a A, B, C, flat. I think it would have been a little too short in time. So I was looking for this to be a wave 1 instead of a wave C. And we were looking for a pullback here for a wave 2, which is pretty much what we're getting right now. So either this is a C or it's a wave 1. Both impulse structures. Afterwards, we expect an A, B, C, or a B, or a 2. Both corrective structures. It's just a matter of which one is more likely. Ultimately, we don't want the correction for this wave 2 to be longer in time than the prior wave 2 correction. That would be an ultimate invalidation for this. And obviously, we don't want this wave 2 to go below the origin of its wave 1. That would be ultimate invalidation for it as well. And this would be validation for our bearish count. I do think this is the less probable because it's a higher time frame 1-2-1-2, which they don't really play out as such, but it's still valid, and that's something that I like to preach. We always come back to validity. So that's recapping our higher time frame counts. I'm going to go ahead and jump into our lower time frame counts that we're monitoring. Now, actually, before I jump into this, let's just do a little bit of a recap of how we got here and where we came from. So essentially, before we dug into that monthly fair value gap and swapped that 48,000 buy-side liquidity, we were looking for it to dig up into there and then immediately reject to come to this weekly fair value gap. Pretty much about 40,000 to 38,000. After we dug into this and we swept that liquidity, we got that rejection. And the target was this low. That was the minimum target that we were looking for if we didn't dig into that fair value gap on the weekly. So that was what we were monitoring. Once we actually took that low, and then we immediately rejected back up into the price territory, previous price territory, to me, we were looking for something of a diagonal structure. And ultimately, still looking for this weekly fair value gap from 40,000 to 38,000. Once we finally dug into that weekly fair value gap, we were looking for a large reversal for an A wave or a wave 1. So right here, we were looking for an A wave. Extreme reversal. We got that extreme reversal. After this impulse was completed for an A wave or wave 1, we were then looking for an A, B, C retrace. Either a moderate retrace to about 42,000 to 41,000, or a deep retrace to about 40,500. Essentially, we did get that A, B, C moderate retrace right there to about 42,000. And now it was a matter of if this is completed, this B wave or this wave 2, or if it was not completed and we still had a little bit more of a move up and then a move down before it completed. So now here we are. The first count we're going to take a look at is that this is a WXY. The perspective that we're going to use is that this is for the bullish count, meaning we're looking for this as a wave 2 or a wave 4, either an intermediate wave 4 or a minor wave 2. And up here we have our minor wave 1 and the intermediate wave 3. Just to have a little bit more perspective, let's put up the targets on a lower time frame that we're monitoring here. There's the weekly fair value gap that we dug into. There's the impulse for the A wave. Now it's about monitoring this B wave. Once again, it could have been completed right here. I think it's a little bit improbable due to how it's consolidating sideways like this. It still could be a wave 1 into a 2 and go up for 3, 4, 5. I don't like this though, because if we do force this B wave here, we almost have to look for a really shallow C wave, because the high is right here. It doesn't really give it much room to really kind of flesh out a nice impulse with strength. We'd have to really look for a weak C wave. So I don't think it's done. I think that we're actually seeing a flat internally here, where this is an A, B, C, and then we get a C wave. This would give it the room to really have a nice impulse that would be similar in strength to this A wave. Almost a 1-to-1. That's what we'd like to look for. So that's one of the reasons why I'm looking for a deeper retrace, either right to this hourly fair value gap, or if we just sweep these lows like this, we just sweep that. That would be okay as well. We still get a moderate C wave, but I'd like to see this. This is what I'd like to see. Now, this internal A, B, C is just for an X wave. It's a matter of perspective of how you're viewing this leg here. If you see this leg as more as a 3-wave move, then you have to look at this as a W. There is a chance that actually this could be an A wave, and I'll discuss that here a little bit shortly, but I want to focus more on this count. So it's a matter of perspective. Either seeing this as an A, B, C, then you'd want to look at this as a W, and then look for an internal A, B, C for an X wave. Then we get another 3-wave move, A, B, C, or a Y wave. Traditionally, we look for the targets for a Y wave. It literally could just do a moderate ABC, take this low, and then reverse. There's potential for that too, but I do want to see it have a little more strength, at least to the 1.13. That's what I would be looking for. If anything, I would like to see it take this low, right where it started that expansion. Probably a lot of positions here that were built to create that move, and a lot of them holding those positions. So that would be a good area to sweep as well. The other perspective I can see is if we're adopting the bearish perspective, meaning up here is our wave 5 of wave C of wave B, and we are impulsing down to new lows. Now I'll basically say that once again, this is still, I don't want to say forced. I will say it's forced. You know, it's a very exaggerated contracting diagonal structure. This wave 5, this wave 5 right here is longer in time, or longer in strength than this wave 3, and it's got a pretty big overthrow. It overthrows this trend line a lot. Traditionally, we want to see something like this, like that much overthrow, but seeing this much overthrow is a lot. So it's exaggerated. And once again, the wave 5 is longer than the wave 3. But diagonal structures are really tricky. The past year or two, I've kind of adopted a more looser stance on them than being strict. But you're playing a dangerous game once you begin to be loose with the rules. It's a matter of how long you have been monitoring these structures and viewing their probability afterwards. It's to me, I'm not going to rule it out, ultimately. It does provide us wave degree confluence, because regardless, if this is a wave 1, then we need to come up for wave 2. So we're still getting the A, B, C retrace that we're looking for. And internally, we're also getting the A, B, C flat that we're looking for. It's just a matter of if this is a 2 or if it's an X wave. So we have directional confluence. We're expecting the same thing on multiple counts here. The only difference here is the timing. On this count, we're viewing this correction as a minor correction. On the other counts, we're viewing this more as a minute correction. I can justify it though. When we kind of separate the timing of these impulses, this impulse right here was 7 days. That's at least what I'd like to see for a minute wave. It's definitely valid for a mini wet wave for those who know my wave degree timings. Now, due to that, that means this can be a minute correction or a minor correction. We'll just have to monitor it. The last way that I can see this, it kind of trickles back to the higher time frame 1-2-1-2 scenario, where we were talking about this as a large flat pattern right here. Remember, we could have that wave 1 pivot ending right here. This could have been an A, B, C. And we were saying how the C was improbable. Remember, we were saying this is a C, or a 1, or an A wave. But we said the 1 and an A was more probable, which it still is. That's what we're monitoring right now. But we can't discount a potential ending C wave, or a wave 2. I think it may be improbable to expect a W wave here, because I really don't see many WXYs where the W was a large expanded flat. This is a pretty large expanded flat. It can happen though. So even internally, this still could be an A wave. If we're looking at this as a W, then this could be a B wave. And then we move up for a C wave. Or if we rise with volition and strength and really break this, once again, that really could have been a C of a 2. And now we're impulsing up for a new bullish leg. So really, honestly, the key takeaways here is really monitoring the internal structure, because we know it's either an A, B, or C, or this is a 1, 2, into a 3. Monitoring if this is a C wave pivot, or if it's a wave 1 pivot, or if it's a wave A pivot. And same up here. Is this a B pivot, or a C pivot, or a wave 3 pivot, or even a minor 1 pivot? So being aware of the pivots, target-wise, once again, I really do think, due to how we're consolidating internally right here, we need a companion impulse for this one. And to me, this looks like it's brewing for an A, B, C. And also, once again, if we were to force this, it would be very improbable moving forward. It would be very shallow and very quick in time. So I do favor us doing more of an A, B, C. So target-wise, before we dig into this fair value gap, we actually want to take these lows. That's what we're looking for. Moderately, we can just take these lows and move up. But to really have some nice strength for this C wave, we would like to see this C wave really come down, dig into this hourly fair value gap, coupled with a golden fib pocket as well. That would be great. It would be nice structure as well, good geometry. Now, there is potential that this could be consolidating here for a triangle like this. I think it's a little forced internally, and also I really don't want to see a shallow wave B or wave 2, so it's a little unfavorable to me. It's not something we can invalidate right now. It's still probable, but I just don't think it's something that we should be really putting weight towards. I really still think we should be monitoring an A, B, C flats internally, and then look for an impulse up here, or a C wave. Those are my primary expectations here moving forward. And then once again, based on timing, internally, I'd still say we probably have another 7 days, 5 days of this correction internally before we start moving up. And we want to see similarity in time for this C wave as well with this A wave. Usually, C waves are very similar in time and strength compared to their A wave. And then lastly, lots of wave degree confluence. Pretty much all of our counts, we had an ABC internally and an ABC externally here. So lots of wave degree confluence. It's just a matter of monitoring structure and timing here. That's pretty much everything I wanted to go over for today. Hope everyone enjoyed it. As always, thank you everyone for joining, watching, and if you did enjoy it, please like, please subscribe, leave a comment, and I'll see everyone next week. Hope everyone enjoys the rest of the weekend.